Welcome to Investing Insights, partnered by Right Property Group. This is your host, Phil Tarrant.
Good everyone, it's Phil Tarrant here. Welcome to Investing Insights of the Right Property Group. This is our 12th episode as part of this series, so the conclusion of Series 1 of the Investing Insights of the Right Property Group. And back in the studio to help me out with this, I have Victor Kumar and Steve Waters, co-directors of the Right Property Group. Guys, how you going?
Well, mate, how are you?
I'm good. Victor, what's been going on, mate?
Mate, plenty.
Yeah?
Plenty, yeah.
I think we started the same podcast last time, exactly the same way.
Exactly the same way.
What's been going on?
You haven't got a lot to say.
Mate, it's called, see how I always lead to him first, because I know he's got rapport and banter, whereas I went to you to be silence, you know.
Oh, well, I'm just the boring guy, apparently, yeah. That's right.
I go to Victor. Victor's my guy. He knows what's happening. He's got his finger on the pulse of property in Australia.
A year down the track, nothing's
really
changed, right?
How's it been? You enjoy the year?
Yeah, it's been fantastic year. Yeah, lots of changes in terms of finance, lots of changes in terms of where the market is and so forth, but the fundamentals never change.
That's good. So how would you explain Right Property Group a year ago to Right Property Group today? What's been the biggest sort of evolution with you guys and your business?
Have we got a year older?
You look younger. I don't know. You've been getting some Botox or something.
Carver.
Carver.
That's what it is. Yeah, that's my secret. Carver and curry. Yeah.
We'll move straight along from that. No, what's the difference? I know you guys have been busy. As a lot of our listeners know, I personally use you as my buyer's agent, so I'm fortunate to spend a lot of time with you guys and just watching the evolution. But markets change, people change, finance change, banking rules change, but there's a lot of consistencies in property investment as well, isn't there?
Absolutely, and for people that have always addressed cash flow, in other words, affordability of the property itself, not a lot has changed, except perhaps that the ability previously would have been to perhaps buy 3 or 4 in a year, and now it's possibly 2 because of the constraints in terms of finance. The markets still are very much the same in the areas that we were buying in the 12 months ago as to where we're buying right now. It hasn't changed substantially in that sense. And certainly we've had a budget in the midst of that as well, and we've had changes in terms of how depreciation works and how negative gearing works now as opposed to what it was 12 months ago. And as far as the RPG clientele is concerned and our outlook on the market, nothing's really changed. The fundamentals are still the same. We've never taken tax into account as a incentive to invest in property. Certainly it is a nice add-on bonus, but never an incentive to invest. So as far as we are concerned, it's a business as usual.
And for property investors, I'd probably concur with that. There's a lot of commonality irrespective of what's going on with the market or the stuff you can't control. When I look at my portfolio and the way that I'm investing, I'm still investing the same way I've always invested. I might be investing in different locations, but my fundamental strategy and process is the same.
Absolutely.
And Steve, I know for as long as I've known you, you've said the same thing. You know, your strategy will evolve, your goalposts may change as you get more mature and sophisticated in investing, but there's a lot of commonalities. It's okay for things to be the same in property investing. It's okay to keep repeating the process if it works, and even though it might not be sexy and exciting, you've got to remember what the end game is, right?
Well, always, and that's probably the problem, is that people do get bored with just the same process that happens to work as well. So they tend to venture out and perhaps roll the dice, do something a little bit more risky, like developing or bringing something up out of the ground. When the fundamentals and the way that you research or go about property investing doesn't change, and for the most it shouldn't, the real uncommon factor there is finance. It's always finance. It's the ability to get money.
It's a game of finance, isn't it?
It is. The ability to recycle money, the cost of money. That's the linchpin to everything. And we've had some changes, as Vic said, which were well needed. Significant changes, and were well needed. It's something that we've been talking about probably for the last couple of years, that money needed to tighten. It was too loose. Too many people were getting it that perhaps shouldn't. And too many areas were being financed heavily in terms of suburbs. So the changes that we've had have, whether it be the levers that APRA have pulled via the banks and so on, I believe they've worked, and I think they'll continue to work. Now, having said that, though, I'd probably suggest that they could tweak it a little more in terms of postcodes, perhaps, rather than just blanket approach. So I don't think much will change from that point of view. Money will still be tight. And the good investors, or the real investors, the sophisticated investor, they'll continue on. They're enjoying this moment in time, so that the general public is perhaps finding it a little harder as well.
Yeah, and staying on the theme of 1 year on, this is the 12th episode as part of the series, monthly episode. I'm seeing in our portfolio the cyclical nature of property, and property is influenced by all these levers that can get pulled, which shape investors' capacity to, number one, borrow money, and number two, their appetite to borrow money within the context of micro economic factors. And I was on the phone to you the other day, and you said, Phil, got good news and bad news. From what I understand, 3 of your properties out in Western Sydney are becoming vacant. The good news is all the rents are going to go up. So we're at that point right now where, when we secured these properties 6 or so years ago, subsequent to that, sort of 2-3 years, heaps of investors got out to that market, Western Sydney. I'm talking sort of Mount Druitt way.
Yep.
And what happened was that rents come off because there was so much property in the market to invest in. Now, we're seeing that cyclical change now. We're seeing a slowing of property prices out in western suburbs of Sydney. They haven't stopped. They haven't gone backwards. They've just slowed in their growth. Therefore, the attractiveness of that market for investors have moved elsewhere. So we're seeing positive pressure now placed on rents, which is going to improve yields.
Yep.
This is just the nature of property investment.
And it's very cyclical. It happens every cycle. Doesn't matter where the area. Usually when you get an uplift in price, you do get a reduction in rents, purely just from availability of accommodation. As you say, it steadies out. You get that point of equilibrium, and then things start to reverse again in terms of cash flow on the way up. We've got the perfect scenario, though, over the last 12 months where money is still very, very cheap. So our ability to be able to hold the properties, perhaps while rent has reduced slightly, hasn't really hurt us too much, as opposed to go back, 5-6 years ago when rates were at 6%, 7%. Which is normal. Then you would have seen a lot more, perhaps, urgency within the market. This year, we haven't had it. Next year, yeah, I'd probably suggest we will.
Yeah, so what we're painting here for our listeners is the cyclical nature of property investment, and obviously we use a very tangible example there of price growth slowing, western suburbs, rents going up, which is good. There's a lot of investor activity at the moment up in the Brisbane area. I know you guys are up there, we're investing up there. There's some other buyers agents up in that marketplace for good reason, and we've discussed that beforehand. Property investment, and you guys do this day in, day out, every single day. It's really identifying what are the drivers for growth in suburbs, what are the drivers for increases in yields, and you mirror and match all that together to actually identify places to invest in. You're up in Brizzy right now, but I know you guys have been on the road recently looking at some new spots around Australia, looking for that next location to be investing in. And I'm really quite interested because I was on the phone to you guys, I think it was last week, and you're on speaker. I think you were together, you were driving somewhere. Well, what are you guys up to? And you went, well, we're out looking at some new areas. So obviously tapped you up and said, where were you? And you're in Perth. But what I want to do, and really the basis of today's chat, and I think we've sort of organically got to a good point so we can have a chat about this, is the science of researching a new market. I really want to dig down into that. So, we can talk about fundamentals, and you've got to find places that's got wage growth, population growth, infrastructure growth. We all know that. Okay, it's a given we know that. But what is the true science of researching a market? So you boys, you fly out to Perth, you land at the airport there, you get your hire car. What do you do? What happens? What's next? You were there for about a week or so, I think, or 3 or 4 days, a week. Well, what do you do? And obviously you're buyers agents, you're out there looking for clients, but a lot of people that listen to this, they do this themselves. Yeah, that's cool. So let's get some of those gems from you guys. What do you do? How do you do it?
Sure. Before we start, I just want to put it out there that we're not endorsing that Perth the place to be right now.
No.
In that sense, we're still in research phase. And for you listeners out there, you really need to look at your individual circumstances to see whether it would be a market that you would want to get into right now. And obviously,
there's his disclaimer, right?
Well, I was going to add that. Good disclaimer, Victor. Let me say, remember that this is a general conversation only. Anything we talk about doesn't take into consideration your own circumstances. And we say this in jest and we're giggling about it, but it's true.
But it's for sure.
Yeah. But to Victor's point, this is the science of researching a new market.
Correct.
You got to go out there. You got to burn the shoe leather. You got to get the ground truth. Use one of your terms, Steve. And just because you're out there doesn't mean you're going to buy there. You could have gone out there and gone, nah, no way in the world. And we'll get to that. But how do you do it?
Well, nothing, as you said, nothing beats on-ground research, right? So you can do as much research as you can behind a desktop. But once you're walking the streets, that's when you actually, in a good sense, that's when you actually get the true vibe of the area as to, what's the confidence level in with locals? What's the confidence levels in terms of the businesses in that area? Are they all doom and gloom, or are they seeing rays of sunshine coming through the gloom in that sense? And it's really important to catch that, because at the end of the day, it is the local sentiment that kickstarts the economy in there, along with confidence in the market. And once the confidence in the market starts building up, that's when a lot of the media, a lot of the lay investors, they start catching on to that area, and it starts gathering its own momentum. So the secret of investing really successfully, which is what we help our clients do, is to be ahead of the curve. To be there on the ground before it becomes a vogue area to invest in. So if you come back to your Mount roots, your Campbelltowns of New South Wales, or the Logans of Brisbane, that's what we did in that sense, is actually physically went on the ground. And obviously, if we're talking Perth, the very first thing we did when he picked up our car was wait for Steve to work out his GPS and connect his phone on the...
Who's the driver?
Steve's the driver.
That would be me.
Yeah. He's Miss Daisy.
So this is really, really important.
A reverse
really
colonialism.
Did you guys I've seen what you drive, Victor. Did you guys get like
a Datsun?
Did you guys get a Kia, or did you get something a little bit fancier?
No, I'm 6'3". I need a SUV, friend.
Some of the good sat nav. All right.
Yeah, that's it.
So you drive. You
sleep. Vic sleeps.
You sleep.
Yeah.
Okay, but what do you do? What was the first thing you did?
Look, if we just go back one step, and because you talked about the fundamentals, and we all know about that, and that's for real. Before we actually go to the area, this has been probably 3 months worth of
online research.
Fundamental research beforehand.
What sort of research is that, though? Is that just getting a feel for the market? Obviously, data.
Yeah.
Painting pictures.
Talking to a lot of people as well.
Okay, agents.
Yeah, talking to a lot of agents, talking to a lot of other industry guys over there, because everyone's got an agenda at the end of the day who's local to the area. And so we're trying to sort the wheat from the chaff, so to speak, other than data. So as soon as the very first thing when we go into any area, and we're only talking about Perth because that's the latest one that we're at, the very first thing we do is we literally want to see who's at the airport, how many people are at the airport are coming in, how many are going out. And if we
that matters, right?
Oh, well, it does, because I'm trying to look for
blokes in fluoro.
Exactly. High vis, whether it's on, whether it's off, and we all know it's off. But how many tourist dollars are there? How many tourists are there? Which is pretty easy to spot. But also, how much are people spending straight away? So we're out of the airport now, and one of the very first things we do is we obviously check into our hotel and we go out straight away. I want to know who's spending that disposable income. Are the pubs dead? Are the coffee shops silent?
The shopping malls.
The shopping malls, which we'll get to that in the minute, I suppose. But it's talking. We do a lot of talking. We do a lot of sitting, and we do a lot of people watching. Voyeurism, if you will.
Street walking.
Well, that's Vic's style.
Anyway, moving right along.
Moving right along. And although it sounds very, very basic, it's often the best sort of research that you can do, and we're trying to compile it all together along with our data and everything else that we've learnt beforehand. But usually the first couple of days are around just purely people watching. And Vic mentioned shopping centres, so if we once again talk about Perth, we went to maybe 20 huge, large shopping centres.
Really?
Mm-hmm.
Because it's in different areas, because we're trying to see how many people are in there. Well, first of all, how many cars are in the car park. And once again, I can see us getting slammed for this from the purists and the data collectors and what have you, saying, well, that's pretty basic information, but I challenge anyone to beat it in terms of authenticity and how it works. How many cars are in the car park? What sort of cars are in the car park? How many people are in the coffee shops, walking through the shopping centres? Who's going into the shops? Who's actually handing over cash?
What's the demeanour of the barber in the shopping centre, right?
Yeah, I know.
I was going to say, Victor, you're looking pretty smart at the moment. Did you get a haircut out there?
No, I didn't.
Looking very stylish.
Extensions.
Is a good extension. Anyway, sorry, Steve.
But because that's that's a catalyst for the economy of the shopping centres. And
so disposable income, really.
Disposable income.
Yeah.
And look, and if we use once again Perth as an example, some of the shopping centres, in fact, most of the shopping centres we went to, the cafes were full, but it's $4 a coffee, but the shops were empty. So no one was walking into the shops and spending the money in a lot of these areas. So it's about people hanging on to their cash, hanging on to their money. They don't want to spend. And just the general nature of the people's demeanour, their level of confidence was just not there in a lot of these areas. Now, having said that, in some of the other areas, it was a bipolar opposite. It was shopping centres full. It was a buzz of activity.
Is this the higher, and I'll put in inverted commas, higher economic, social,
No,
or the lower?
No, there was, and that's a really good point. There was no correlation. The lower demographics not spending money, the higher were. None of that. It was just random, and I'd say it was more about location to the CBD, to the airports, the infrastructure perhaps. But and having said that, there was infrastructure everywhere we went. It was really interesting to see. Now, other than just obviously sitting in the shopping centre, that's only the first port of call. Then we like to walk the streets, as Victor would say it, and up the strip malls, not strip.
And, I think we're going to have to do it.
Yeah, I know. Yeah. But just the strip shops, just to see how many people are walking around and what have you. Now, it's really, really important because you need to judge the vibe of the area. And obviously in those types of areas, that's where the real estate agents are. Now, talking to your real estate agents is it's a given. You want to do that because they're going to give you the sense of the market, but they're also going to feed you a lot of rubbish as well, because their job.
Feed you rubbish about the area. Feed you rubbish
crap.
About.
Yeah, they're just going to just about the area and how buoyant it is and how good it is and how good they are.
So just on this point then, so what would be the 5 must-ask questions to a real estate agent if you're just scoping out a zone? If you sort of rock up at the shop front and go, hey, you've got an agent here, I want to have a chat with them. What would be those 5 things? That organically you would want a response to? What would you ask him or her?
I'm going to take it that people have done a bit of research beforehand, days on market and all that sort of good stuff. One of the very first questions I ask is, how many properties have you sold this month?
Okay.
Because I want to see the buoyancy of the market. How many properties, or how big is your rent roll? And then how many have you got vacant today plus 1 week? Because that's going to give me a better indication of what the vacancy rates are in an area. I also want to know who the gun lister is for the in the office. So who is the agent that has the capacity to get people to sell their property, because they're the ones that control the deal, so to speak. And that's in correlation with how many they've sold this week. I also want to know how many other agents are in the area, rather than me just look around, and how often do they swap. So, one's gone from Ray White to LJ Hookers as an example, because that also gives you some, and why that's an important question is it gives you some indication of how happy they are within an area. If an agent is bouncing from one office to another, to another, to another, there is something very wrong in the fundamentals of that, not that area economically, but within the property cycle, sales.
They're not making enough money.
So this is like the more intangible stuff.
This is the stuff that you can't measure without asking. Yeah. And that's the whole purpose of it, because people they rely too much upon data, whether it be from CoreLogic or Pricefinder or whatever it may be, or agents' statistics. And a lot of that is, one, old. It might be 2-3 months old and it's gone. It also might be just lies or manipulation, more to the point, of data. And so nothing beats the ground truth. And honestly, even though we're talking about it, and we're talking about it like with a little bit of tongue in cheek, it is the most important thing that we do as researchers, is to actually be on the ground and absorb everything, no matter how petty it may seem. The time that we spend there and absorb it all and put it all into the pot to get a feel for the area is ever so important.
Yeah, and this is the point. We've spoken about this on Investing Insights, but also on the Smart Property Investment Show. One of the reasons why I use a buyer's agent is that, there's no way in the world I'm going to be able to, if I'm doing it myself, compete with guys like you who are this depth of true market research. That anyone can get the data, right? It's how you choose to interpret the data.
Absolutely.
It's totally up to you. And 100%. A lot of people always try and interpret. They always look for the good in data to justify a point rather than look at negatives. So that's a skill set in its own sense. And I think most people don't really know how to assess data because they do it with some sort of prejudice, either to prove a point or disprove a point.
Absolutely.
That's not cool. So you're doing it yourself. Keep that in mind. but then all this more intangible stuff, but the real factual stuff about the true appreciation and understanding of a market, to break that down in micro elements to get a feel for, is there a propensity for people to want to buy these properties and therefore show price growth, which is what we want as an investor. So Victor, we've spoken about some really micro stuff like the feel of people, what it's like at the airport, getting to shopping malls, shopping centres, getting a feel for spending. Then Steve got into some really more tangible stuff about speaking to agents. What else is there that you can pick up if you're assessing let's say we've corralled down to a suburb that you really like the look of? What are those other things you look at when you start getting your car and driving the streets? What's next? What do you look for?
Sure. And to put it in perspective, this on-ground research is just not a once-off. So once our plan is to go back down to Perth in the next month or so.
Yeah, this is the that was
prelim
the
stuff.
No, that was the third trip over. Third trip over. So it's not just a one-off occurrence.
Yeah. So it really comes back to making sure that we're Sydney-based. So we're making sure that we're not seeing the properties there with Sydney eyes. We got to see it from Perth eyes. So that way we can then know that there's a bargain there. So we can spot the bargain based on local price levels and not from an interstate price level. So when we're driving down the suburbs, we look at things like unkempt properties that have been up for rental for quite a while, with signs fallen over and so forth. How many properties are obviously rental properties? How many are vacant and have obviously been sitting there for a while? In coming back to the agents itself, looking at their window display and seeing how old those display signs are, how they faded from the sun, which means that they've been holding on to their listing for a little while.
That's a good point.
Yeah, it's a dead giveaway. Yeah, so those things. And then amazingly enough, even though you could see that it is a slower market, there are still markets within markets where agents are a lot more buoyant and are absolutely making sales left, right and centre. And there are other agents that are struggling. So when we as potential buyers are looking through their window display, we probably would have been approached by maybe one or two agents.
That was amazing. Hey,
that's right.
Here you are having a potential customer standing outside your window, and I think there was only two agents that literally got off their backside and came out and said, "Going to help you with anything." Now, that to us, that was just amazing.
So the morale of the agents is pretty low.
Very low. Yeah,
it was very, very low, and a lot of them tried to perhaps talk it up. When you ask them some questions about the market and what have you, and we don't go in there saying, "Look, we're buyers agents and strategists."
Big hot shots from Sydney.
No, we don't. We don't. You try and just blend a little bit. So you start to ask them the questions about how many they got in the market and so on and so forth, and they're doing their best to be upbeat and a salesman, and you let them go on for about 15 minutes, and then at the end of it, we will just go and say, "It's still crap." Hey, they go, "Yeah, you got us. It's still crap."
When do you disclose that you guys are buyers agents, or do you?
Usually after we've let them talk for a long time. Because we don't want them to. We want them to be natural and talk to us naturally, because a lot of what we do is about dealing with agents that we feel we can create a relationship with. So if we've got some sort of imbecile over there that's a big shot and talking it up and what have you, we might be able to get a few properties off him, but I certainly don't want to create a ongoing relationship with them. So we do need to gel. Yeah.
So the other thing that we look in terms of research, like one of the things that we did notice was that there is a lot of infrastructure going in different areas, right? And shopping malls, like there's about 4 shopping malls that getting about 350 mil plus being spent on them to expand them. One of the key things that we need to remember is that we should not confuse that activity as being signs of recovery, because often if you look at it from a economic point of view, if your market is slow, the only way to kickstart the market or attempt to kickstart the market or to look at getting some buoyancy back in the market is for the local government and the state government to spend money on infrastructure. That creates the employment and therefore hopefully starts the momentum again. So I think a lot of that is happening in Perth at the moment, with a lot of shopping centres that are being massively revamped, and it's really crucial that as part of research that it's not confused with major infrastructure going in the sense of
because they have to, because to keep up with demand. Yeah, and it's not the case over in a lot of the areas over there. Whereas back here in say Sydney, where we've been spending billions on infrastructure, it's well needed. It's it's about time. Other areas, it's quite the opposite. So I think part of the research, or the on the ground truth part of research, so to speak, is ever so important. And the problem that people can have is that it does take time, and it takes a lot of time. It's not a weekend thing. If you wanted to buy Newcastle as an example, you wouldn't just go up there for the weekend and think that you're going to get some accurate...
You want to become a local.
You need to become a local, and that doesn't mean move there, but for all intents and purposes, you want to spend enough time there. And I think people tend to lack in that part of the scope. And at the end of the day, you are spending hundreds and hundreds and hundreds and hundreds of thousands of dollars. You should put the time in to be able to get a fair result. And if you don't, well, then you reap what you sow.
That's right. Yeah.
So I was in Perth, and look, I don't want this to be Perth specific, because what we're talking about here,
Bash Perth Day.
It's not Bash Perth, but this is a process that you can look to engage at any market in any part of Australia, right? You could fly out to Broken Hill tomorrow and do what you've just done, and it will be a very different experience, no doubt. So this is not Perth orientated, but I was out there earlier this year and I spent some time with some agents, and those guys are broken. Right, the morale is all-time low. There's some good guys in the marketplace who are still kicking goals, the hungry agents. Yep. But a lot of them are just, a lot of them throwing their hands up and going, this is too hard. I'm out. I'm gone. But you have some good guys still in the market operating hard. So, and
there's a lot of guys coming, like not so much agents. There's a lot of the net migration numbers. There's a lot of people coming from over the west back over to the east looking for work, because there just isn't the work there, and that affects the whole economy quite obviously. Yeah. But just morale, like we talk about morale's such an important thing.
Yeah, morale dictates sentiment. Sentiment dictates people's actions, right? So
it's one of the fundamentals of it, and we've often talked about this. All these other things such as supply and demand and yada yada yada. A lot of it stems, if not most of it, or all of it, stems from consumer confidence or morale.
Local consumer confidence.
Yeah, it's such a huge player in terms of where a market is and where it's going to go.
So the morale of real estate agents there. So getting the read on this, and I think this is a really important thing, because for me, one of the true value-adding components of using a buyer's agents is this relationship with agents, right? As an individual investor doing this yourself, it's nearly impossible to replicate it. You just don't have the time or the bandwidth to create these relationships with agents. So do you guys like to find agents who are these guys who's got really low morale, they're a bit broken, they're desperate, they're probably struggling to do sales, and therefore they might not be marketing property correctly, or not being able to manage expectations of the vendor correctly? Are they like gems for investors to actually find them? Or are they the ones you don't want?
I don't want them. I want in a situation where a market is perhaps dead, I really want to be dealing with the principal of the office, the owner of the business, because at the end of the day, they're the ones that pay the bills.
Yeah.
And so they will make the sales. They will do whatever they need to do. Now, I'm not talking about being unconscionable or anything like that, but they perhaps could speak to the vendor a little better than perhaps the first year apprentice.
More influence.
Yeah. And that's really, really important, because the people that have got their tail between their legs, well, they're not trying hard anyway. They're probably looking for another job elsewhere. You want someone who has a vested...
And you can build that relationship with the principal long term. So he should be there in a year's time or 2 years' time.
You'd hope so.
And one of the metrics that we often talk about, Steve, is just how proactive agents are in dealing with you guys as buyers agents. So often it's agents hassling you saying, I've got property, which is a good point for you to negotiate on. Then markets shift and you're hassling
and it's like, right, property who?
And they don't want anything to do with you, right?
Yeah.
And you see that shift, that's a seesaw effect. And you could probably, each time in each market, you could probably work out when it swings one way or another.
That's a really good point. But there's one element in there that's the grey area, and that is where they are so on their knees that they couldn't even be bothered ringing you, because
they might get a rejection,
and that might be Perth. It's like there are some agents that are hassling us, and there are some that are just like, you know what, I know you're not going to do it. We know that your interpretation of the market is, whatever it may be. So they've given up. It's just a death by butter knife for them.
And are you guys picking up anything in Perth? Or
we've tried to, out of the whole area.
So what is a really good buy in Perth at the moment then, if you can get them?
I think, look, for me, obviously the infrastructure, you've got to be where the action is and where it's going to be. Shopping precincts and large shopping precincts are very, very important. Probably some of the larger blocks as well.
It's like development potential or upside potential.
Yeah, when we talk about development though, and just to be really clear, we're not interested in building 4 or 5 stories up. I'm about controlling the opportunity and maybe some subdivisions. I'll let the developers be developers. But I think something that I'm buying below cost of replacement, now that means in terms of purchasing the land and then construction, and something that's going to give me a reasonable yield, cash flow, rent, to be able to control the property. Because no matter what anybody says, I don't think Perth is going to bounce tomorrow. I don't even think it's going to bounce next year. But this is about getting in where you can.
You're getting in ahead of recovery.
But with enough cash flow to be able to support it and buying it well enough, which is really, really important, so that you've got some risk mitigation in there. Because, and not that this is all about Perth, and I can just hear all the Perth guys slamming me at the moment. I think
if you've got any problems, call Steve Waters, 1-800. Yeah.
I really think that 80% of Perth, all the rhetoric and all the stuff in the media that we're seeing is just everybody trying to kickstart the industry, which you can't blame them for. My fear is that some people are actually believing that, and I would suggest to you that you go over there, anyone that's thinking of purchasing or not using a team of people around you, to actually go over there and see for yourself, because
don't get caught in the hype.
Look, there is some hurt there, and there are still some places there which is we'll classify within the 40 minutes of the CBD, which I believe if we get 1 interest rate rise or maybe even 2, those people that are just hanging on won't be able to hang on any further.
Trouble town.
Yeah, and a really good indicator, like coming back to the indicators that we're looking for, the shopping centres, how many people are spending money. You want to be connecting with the people that their whole livelihood is around sales, in terms of selling stuff to make a living. So not just the shops, but go to the car yards. Go to the new cars and the used cars and see how many they're turning over, see how many's for sale. Really, really important. Just check their buoyancy between their ears. Anything that's sales related, you need to be connecting with them because you want to see how tough it is or how good it is for them.
So let's just summarise this. So you're looking at consumer sentiment, so sentiment to spend, right?
That's number one.
Okay, yeah. So how does sentiment to spend translate into positive pressure on property prices? So therefore they go up in value, which is what you want as a property investor.
Yeah, really loosely, it makes the money wheel spin. Okay. So when there's consumer confidence, people spend and they believe there's a future, so to speak. And when there's a future, it usually means that there's an increase in people wanting to live in an area and therefore pressure on accommodation. And it just starts that whole cycle. Now, just because consumer confidence comes from the bottom of the cycle, and I'm just talking purely about consumer confidence here, just because it starts to increase somewhat doesn't mean that there's going to be an immediate direct reflection on property, which is what we're about. It does take some time, but it is just one of and probably one of the most important indicators that we're looking for so that we can get in ahead of time. It's just knowing when to pull the trigger. That's the $64 million question.
Yeah. And Victor, I remember early doors when I met you, I spent an afternoon with you in Campbelltown, checking out the joint and, driving around, and you pretty much knew every house and every street and every coffee shop and whatever, right? In terms of ground truth, you knew it well, and you were pretty deep in that market buying at that point in time. This would have been 2011, I would imagine. Yep. But you're in that marketplace. You've done well out of it. Your clients have done well out of it. We've got stuff in that market. We've done well out of it. But I remember going through that process and your depth of understanding and looking outside of the box in terms of what will make this a good investment opportunity. And I remember you explaining to me, this is quite when I was new to property investment, everyone talks about location. Everyone talks about you need to have premium properties which are close to the CBD. And you articulated to me, the CBD doesn't necessarily mean Sydney 2,000, Melbourne 3,000, Brisbane 4,000. It's about the logic of what is a CBD. And you spoke about Campbelltown, you spoke about Liverpool, you spoke about Blacktown, you spoke about Parramatta. You spoke about these satellite CBDs that have exactly the same impact and effect as what a major CBD does. Can you sort of articulate that a bit for our listeners? I think it's important because in context of Perth is a big...
Absolutely.
regional town, right?
Huge.
So, it's its own CBD. So, does the same logic work in those markets, or is that only really work in the big eastern states?
No, it certainly works in any market, in the sense, in any state. And what you need to identify, to clarify on the strategy itself, you need to be within metropolitan areas, so within driving distance to the main CBD. So if you're talking, say, Sydney, we're talking hour and a half driving distance to Sydney CBD. And then you're looking at then the centre of influence, which is your employment hubs, your Liverpools, your Campbelltowns, and you want to be within 10 minutes of those sub-CBDs. And if you did it that way, then regardless of what the economy is doing, you'll always have properties that can be rented out, even though you might need to discount your rent a little bit. Then you need to adjust it according to the population and what's happening in that particular state. So as an example, we can't apply the same formula to, say, Adelaide as we would to Sydney, where Sydney, I'm quite now prepared to go up to 1.5 hours from CBD, whereas previously it was just an hour because of the expansion. But in Adelaide, if we even went out 45 minutes, I think we're in the sticks in there.
Yeah, it's too far.
So 20 minutes is the max over there. So we need to look at it from those terms to make sure that we are investing in areas that will always be a liquid market, so that if things did change or if we did need to sell our property, we're not struggling to offload it. Yeah. So if we come back to our research in Perth as an example, the very first thing we did do was obviously look at where everything sits, where each suburb is, where the employment hubs are, what were the employment hubs before, taking away the mining towns, right? So we're still talking metropolitan in that sense, and our desktop research was based on, okay, this is where the price points sit in this suburb, in these areas, these are the price points in these areas, this is what will make a good buy, these are areas that still have liquidity, and then when we go on the ground, so we then visit each area, each quadrant, so to speak, to make sure that we're looking at that specific from Perth point of view, but then even more specific in terms of that little demographic, so that as an example, we could be looking at the Parramatta of Perth and not treating it like the Manly of Perth. And it's really important that we do that. So once we've done that, then we come away, we reassess, we make some preemptive offers on properties that would make it a no-brainer to buy.
As a market test.
Yeah, as a market test, to see whether it'll stick and sort of set the baseline and set the tone with the agents and see how responsive they are to low offers or to offers that are a bit out of the ordinary in that sense. Yeah.
And it might be terms or conditions.
Yeah, that's right.
I think the biggest problem that people have is trying to get their head around things geographically because they don't live in an area.
This is the point.
Even we struggle.
Yeah, so what we do is we get the biggest map we can and we put it up on the wall or a wall of the office. Even though we know the area, it's just good to continually look at it with all the freeways that are, and the rails and everything that's in, so you can get a picture before you even go over there, and this is for people that want to do it themselves, of course, where everything is in relation to the CBD, and I'm talking, say, if it's Perth, it's Perth, and then where all the satellites such as Parramatta's and what have you are, because when you're over there, it's very hard to get your bearings, so you need to know what it is beforehand, and because we have obviously quite a network of people, we're able to, in conjunction with seeing something visually, speak to a lot of people as well. So, friends and family in Perth, so on and so forth. Just gives us a very good lay of the land, because you can be looking at something from a data point of view or even from a ground truth point of view, but the locals have the best knowledge, quite obviously, of where and what and where you should be going, where you shouldn't be going, and where the hubs are. So you need to be able to create those relationships, not with the real estate agent from that point of view, obviously.
I think we've done a pretty good job on this sort of science of researching new market. We could chat about it more and more, no doubt, but
just remember, it takes 3 to 6 months to research a new market for us when we're doing it professionally. So for the lay investor, don't go there on a weekend and try and buy something.
Yeah, well, don't do it. Don't do it over the internet.
Yep.
Yeah, very, very good point. And I think it's a given that you've done all this data-driven background research, getting maps
beforehand,
out,
for sure.
Markets.
Yep.
But what's come really clear to me on this is this sort of the more intangible stuff. This is the in intelligence speak. It's human intelligence, right? You can have the best satellites and the best eavesdropping stuff, but it's only when you're on the ground and talking to people that you can actually get the real world.
Spoken like a true operative, mate.
Oh, yeah, something like that. But it's good. But I think it's a pretty good analogy, right? Human intelligence is absolutely critical. You ask 10 people the same question, you're going to get 10 different answers.
Yeah, and my big fear is people rely too much upon the data and statistics and things like that, formulas and what have you, predictive stuff. It just doesn't beat human interaction.
Yeah. So that's it. That's the end of series 1 of
number 12,
Investing
done
Insights,
and dusted.
12th episode.
Yep.
12 months in, I've enjoyed it. I've learned a lot from that. And this is the reason why I like doing this. Right? I've got one of the best jobs in Australia when it comes to property. I get to speak to guys like you and increase my own personal skill set around it. But plenty of gems in there. We could probably write about 100 articles off the back of that, which I think we will do. It's
and so season 2.
Stuff. Season 2. Season 2. And on that note,
there's a channel change.
Some interesting stuff going to happen. But first of all, a call out to all of our listeners. On the 10th of October, we're going to be doing something pretty unique, and we're actually going to record episode 1 of series 2 of Investing Insights as a live podcast, and we invite you all to come along. I would hurry up and I would register quickly because we're going to be out at Ridges in Parramatta, which is about 30 k's from the CBD. You can get there by train, plenty of parking and stuff, but we're going to be recording it live. Steve and Victor from Right Property Group and their team will be there setting everything up, and we'll be ready to roll for about what time?
So 6:30 for 7 p.m. start.
Okay, but you need to register, right?
Yes.
Need to register.
Go to our Facebook page. Yep. You'll find the event there. Click register and it'll take you to the page to register.
How many spots left? I know because I looked at it the other day and it was pretty full. But
it's filling up pretty fast. We will try and create a few more seats. We're talking to the venue.
Pull some strings. Okay, and I'll be out there. I'll be there hosting it with the guys, as well as registering. Make sure that you send some questions in. So as part of it, we're going to do a bit of a Q&A. So if there's anything you've ever wanted to know about property investing, or you've got any feedback on this podcast or anything we've touched on, send those questions through. Victor, where do they go to?
questions@rightpropertygroup.com.au.
Pretty easy.
That's right.
It's good. I like it.
Make sure you rate and subscribe.
Very good.
Hey?
Yeah.
How's
there we go.
marketing?
You sound like a podcast genius.
I've been listening to you.
Thanks guys for the reviews we've been getting on this. It's really cool. So I like the deeper sort of unpacking all these key topics and components of property investing. So it's really good. Thanks, guys.
Good fun.
Awesome.
Let's keep it up. Okay. Thanks for joining us, everyone. We'll see you again, Series 2.